Hey everybody, good afternoon. Welcome to 12-Minute Trading. Today is Monday, the 4th of November, almost past election season. My name is Doc Severson. I'll be your singular host today as we talk about the markets. We're going to have a quick session today. Dave's not here today. He's out of town, getting some well-earned, I would say, R&R at the family cabin. So with that, I'm going to run over to the charts here. Let's kind of walk through things. And I would love to take your questions. If you are joining us live here today, make sure you get your questions in as quickly as you can, because we're probably only going to be here for maybe 10, 15 minutes, depending on the interaction and what kind of things that we stumble over today. So first of all, I'm going to look at the S&P 500 and look at this from a trend and energy perspective. So let's see, I'm going to look at, first of all, I'm going to bring my magic pen over here and get this going. There we go. Okay, so looking at the left-hand chart here, this is the monthly chart, and we have great trend right now. So the trend looks terrific. Weekly chart in the middle. We're getting a little choppy, but this is still an uptrend. This is still higher highs and higher lows, even though we've had 3 weeks so far to the downside, or 2 weeks and 1 day so far to the downside. That is not a reversal. Now, we have reversed at the daily chart. The daily chart is now into a downtrend, but this is only just down a couple of percent, down to the 50-day moving average, as well as some other technical indicators. Now, when we look at this from an energy perspective, we have, I wouldn't say full energy, but there's enough to power the next move up to at least 6,000 or more. There's no shortage of energy at the monthly chart. There is, however, on the weekly chart. So what we've had is basically a 480-point move in 1, 2, 3, 4, 5, 6 weeks, which we are already starting to account for at this point. We're starting to get into the digestion period. Range expansion, range contraction. So we've been in range contraction now for about 2 weeks and a day here. And so what this is doing is just kind of pushing around the daily chart. So if you ignore all of the other noise that we have this week, which is the election, we have the Fed, we have some earnings coming up, and a little bit of Fed speak near the end of the week, as well as, of course, the press chair or the FOMC chairman conference. So you couldn't really account for a more event risk week. We have 150 points of expected move on the S&P this week. So plus and minus 150 points, 300-point range that we could be. So we could be anywhere from, let's just roughly go here. So this would be somewhere down around 55, 75, right? So 150 points to the downside and about 150 points to the upside. So there's a big range. And the price can basically close anywhere inside of this by the end of the week, by this Friday, and still stay within the expected move. So you can see how big this is. So we're expecting some big moves depending on what happens this week. Now, it's not quite as simple if we start to, that's the S&P technical. Now, we could pull up some other things on here too, like the Bollinger Bands, and show that the Bollinger price is down to the lower Bollinger Bands, which would be potential support, although we could see a Bollinger Band ride down here. Welcome aboard if you're just joining us here. Today's going to be a short session, just me, Doc, and I will take your questions now if you want me to cover anything. Otherwise, it's going to be a short and sweet session today. We'll just get to the charts, talk about a couple of things. So what are the risk events that we have? We have I'll just call this the big E, the election. But under the big E, there are a number of questions that we have. So one of the subplots is going to be, will we get a result by Tuesday night? And I'm of the opinion that we may not get a result Tuesday night. We may have a swing state which is unable to or unwilling to report the results, because either through hey, we're waiting on some ballot drops to come along, or we've got a scheduled 2 a.m. ballot drop, depending on the shortfall that we have. All those things. I don't want to get into the politics of it or anything like that, but I think there's a good chance that we get to Tuesday night and the market has no clue who is going to be the next president as of that night. And that's maybe better than 50-50 odds at this point, with as many swing states as we have that are as tight as they are. There's bound to be something happens. Now, the second thing that might happen to that is the losing party may contest the election. So nobody likes to lose, and it may be contested, and we may not wait until the first week of January to do so. So that may be instant. So anything is possible here, guys, and you have to make sure that your actions are scripted so that you're not going to take any pain from this. Now, we had something very similar to this that happened back in 2000. Well, it wasn't that similar, but it was certainly, you guys remember the hanging chads of 2000. So let's go back to that. And let's see, I need a little bit more time here. So let's go back more than 20 years, believe it or not. Let's go max available. And there we are. We're going to look for November. We're going to look for November of 2000. Now, what's interesting here is if you look at this, before I zoom in on this, notice that the downtrend had already started early on in October of 2000. The downtrend, the switch in polarity had already started. So the bear market was already starting to get kicked into gear. And so if we look at this, I don't know exactly what date it was. Let's see, 11-1, 11-2, 3. So here's Monday, 11-6. Here's 11-7. And remember, there wasn't a whole heck of a lot of overnight trading back then. 24 years ago, what you see is what you got. We had very few gaps. You can just look at this chart and tell that there were very few gaps on the S&P back then. So that's Tuesday, and we had kind of a hanging man candlestick here. Nobody knew what to expect, and of course the market closes at 4 p.m. Eastern, and then we don't really start going into revealing results until 8 o'clock at night Eastern. So the market had no clue other than just rumors, but notice that it did rally up to that point. And then the next day on Wednesday, hey, can't make a call. Thursday, Friday, and then over the next 2 weeks, I think it was quite some time, and it must have been not till sometime in December that the Supreme Court got involved. Right, I don't remember the exact dates of this, but it took a while before certainty came in, and the bear market was already well established by that point. So just keep in mind that we could have this type of stuff going on. Let's see, where was that again? Okay, so we're right there. But just the initial reaction, if I look at this and say, all right, let's say we went from 1432 down to about 1330. So that's about 102 points divided by 1432 is 7%. So we had a 7% haircut in 4 days. So that was the Wednesday, Thursday, Friday, and then into Monday before we started to see any kind of a bounce. And I know that it took weeks before we finally got resolution on the hanging chads and counting all the votes in Florida and everything like that. But a 7% haircut, interesting. So that was all based on uncertainty. And, I don't remember any other elections besides that one that had any kind of contest to them. Okay, let's get back to today. So here's today. Here we go again. So have we already started to sell off based on that? Well, I don't think so, but Anything could happen with this, remember. So if we drop 7% from here, so let's just take 57.26. That would be 53.25. That would get us down below the 200-day moving average. That would be a pretty strong haircut from there. So I'm not, I'm not predicting this to happen. I just think there's a very good chance that that happens, that we have some kind of complex result, which obviously gives uncertainty to the market. There's no way that that provides any kind of certainty to the market. The market wants, and I would say it doesn't necessarily care that much which person or entity gets in. All it wants is a clear mandate, clear result from that. Would be good to have popular and electoral college majority on there. Would be good to have that, because that tends to shut the door on any protest down the road. And then we've got our next Fed meeting. Now, this one's delayed by a day. Normally, we have the Fed meeting on Tuesday, Wednesday, and then Wednesday comes out where the chairman comes out, and the policy release comes out at 2 p.m., and then 2:30, they do the Hannibal Lecter. They wheel out the chairman into a gurney, prop him up to a microphone, and let him speak for a little bit. So that's coming on Thursday this time instead of Wednesday. Wednesday is going to be enough problem. Thursday owned by the Fed. So this is a double whammy this week. So I would say be very careful about what you trade this week. I have no intentions on doing any kind of positions on Wednesday or Thursday this week. Maybe by Friday, we'll have some type of clear direction as far as which way this market wants to go. So honestly, I could look at all the technicals in the world right now, and it's not going to really allow us to predict what happened. So what I would say to all of you is plot out the potential moves. Know what you're going to do if the market goes higher, if it goes sideways, or if it starts to sell off. What are you going to do? Don't marry yourself to a certain direction for this. That's what so many of us do. We hope and we want for a certain direction, and we don't really account for any other direction for that. So literally, today's a great day to do this. Write down, if you've got some type of portfolio or live positions or risk capital in the market, write down what you're going to do over the next 3 days, depending on what happens in the market. And it could be the best thing that you do. Okay, any other questions for this? Really no point in going over any other markets right now. We're just sort of in stasis right now. We're kind of walking sideways, a little bit of a doji candlestick today. Very little going on. And what's interesting, too, is that I'm seeing very little time decay on today's options. So if I look at today's options, let's see, actually for tomorrow, I entered options that had an expected move of 40.8. And they're actually higher now than they were this morning. So we're seeing actually this backwardation where instead of over time you should start to see, expected move drop, it's actually rising into tomorrow. So this is not a particularly great time to be selling things, looking for range-bound stuff, even though we're used to that. But it's also too expensive to do anything long. So this is an excellent week to take off. I would say wait it out, wait for a direction, wait for the market to show its hand, and then jump on it. Okay, guys, that's all I got for today. So just a quick update. Markets are still in an uptrend. We do have weekly exhaustion on the S&P chart, which could be causing a technical issue right now with the market reclaiming the uptrend. And this also gives us an understanding as to why we're seeing a little bit of negative price pressure today, because we have this weekly exhaustion. So that could make sense. The markets can do whatever it's going to do, right? Just because some dude somewhere has some study that shows exhaustion doesn't necessarily mean anything, but it is consistent with what we've seen in the past. So, all right, guys, thank you very much for tuning in today, whether you joined us live or whether you're watching this on a replay. And I hope you'll get out there and vote and make your voice be heard. And then let's heal as a nation once we get past Tuesday. Let's see if it's possible to do. All right, thanks, everybody. You guys take care. We'll see you next time. Bye now.